All right, let's talk about SentinelOne. They just dropped a landmark earnings report that really needs a closer look. The stock has had a brutal year, to put it mildly, but this latest release seems to have completely flipped the script. So we're going to dig in and figure out exactly what happened. Okay, so let's set the stage here. Coming into these earnings, SentinelOne stock was down over 27% for the year. I mean, that's dramatically underperforming the market. Then the announcement hits, and bam, the stock shoots up almost 9% in after-hours trading. So what in the world did the market see that caused such a whiplash reversal? Let's break down the numbers. First up, let's talk profit. SentinelOne posted a non-GAAP earnings per share of 4 cents. Now, non-GAAP is just a way of looking at profit that smooths out some one-off expenses so you get a better picture of the core business. And this result was a solid beat. It came in a penny ahead of what analysts were expecting. And get this, it's their 5th straight quarter of this kind of profitability. Now, for the top line. Revenue hit $242.2 million. That's a 22% jump year over year, and it also beat expectations. Really strong numbers for sure, but they're actually just one piece of a much, much bigger milestone the company just hit. And this is the big one, the headline number. The company has officially crossed $1 billion in annual recurring revenue, or ARR. Now, if you're not in the weeds with software metrics, ARR is just the predictable revenue from subscriptions over a whole year. Hitting $1 billion? Wow. That is a massive milestone. It tells you this company has real scale and a customer base that's incredibly sticky. So those were the headlines, but honestly, it's the details behind them that really got investors fired up. Let's zoom in a bit on the key metrics that really powered this amazing quarter. Okay, so when you look at this table, the number that really jumps off the page is down at the bottom, net new ARR. The company added $53 million in brand new recurring revenue this quarter. And listen to this, the CFO himself said that significantly exceeded our expectations. So this wasn't just a little beat, it was a huge signal that their business momentum is really starting to accelerate. And this growth isn't just shallow, it's got real depth. The number of big ticket customers, we're talking those spending over $100,000 a year, grew by 23%. Their international revenue is actually growing even faster than the company as a whole. And to top it all off, their average deal size just hit a new company record. So what does that tell you? They're not just growing, they're winning bigger, more important customers all over the world. So the big question is, how did they pull this off? Well, it's not just about selling more of their classic security product. Nope. The real story here is a huge strategic shift to becoming a unified platform, and the numbers are proving that it is absolutely working. This chart right here, this tells the whole story. For the second quarter in a row, about half of all their new bookings came from their newer emerging products. We're talking data, AI, and cloud security. This is the proof that SentinelOne is successfully making that leap from a single product company to a true, wide-ranging cybersecurity platform. And this is the engine that's driving it all. It's a new licensing model called SentinelOne Flex. Think of it like an all-access pass. Instead of customers having to go through a complicated process to buy every little thing, they get access to the whole platform. It just makes everything simpler. And it is leading to some massive wins already, including a huge 8-figure deal just this past quarter. But, that whole platform shift is really only half the story. The real forward-looking bet that SentinelOne is making is all about AI. And they're not just using AI to make their products better, their goal is to secure the entire AI revolution for the enterprise world. Their big chess move this quarter was buying a company called Prompt Security. See, as companies are rushing to use tools like ChatGPT, they're opening up all these new security holes. Prompt Security's tech is built to watch and control that usage in real time. It's a really strategic play to completely own this new market of security for AI. And their CEO, Tomer Weingarten, just framed it perfectly. Their vision isn't just about selling another security tool. No, it's about becoming the essential layer that lets big companies adopt AI safely. Security isn't the roadblock here. It's actually the enabler. And their AI story isn't just talk. They've got the receipts. Their existing AI tool called Purple AI is on fire. It's growing at triple-digit rates with record attach rates. A study from IDC actually shows the real-world value it delivers. Security teams are fixing threats 55% faster, they're seeing 60% fewer major incidents, and they're getting a mind-blowing 338% return on their investment. So let's recap. A super strong quarter, a platform strategy that is clearly working, and a really compelling vision for AI. So how did management and the market translate all this into what's next? Well, the signals were overwhelmingly bullish. So not only did they crush their Q2 numbers, but they also raised their revenue guidance for the entire fiscal year to a midpoint of $1 billion. In this kind of tough economic environment, raising guidance is a massive vote of confidence from management about what they see coming down the pike. And that brings us right back to our opening question, doesn't it? The market's reaction was instant, and it was positive. The stock jumped from a close of about $17.60 all the way to over $19 in after hours. Investors clearly loved what they saw, the strong beat, the raised guidance, and that strategic pivot into AI. Okay, so what does this all mean for the stock going forward? Let's break down the potential bull case that seems to have the market so excited. Given the momentum they've got with the platform and their strategic move into AI, a pretty common view emerging among analysts is an outperformer rating. You're seeing a lot of price targets popping up in the $25 range. So let's unpack the thinking behind a call like that. The core idea, the whole investment thesis behind this bullish take, you could call it the AI enabler play. Really, it's a bet that with this prompt security acquisition, SentinelOne is setting itself up to be the go-to security layer for enterprise Gen AI. The idea is that as companies go from just messing around with AI to actually putting serious budget behind it, the demand for this kind of security could just explode, and that could lead to a massive re-rating of the stock. And as always, just a reminder that this analysis is for informational purposes only. This is not financial advice.